The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show just a tad differently this morning. I've posted the chart of the DAX already in, but before we get to the FTSE, I wanted to talk a little bit about trading because, trading is related to pressure because pressure is related to money because people keep score by looking at money. And one of my favorite things is to, follow sports memorabilia of what's happened in the past. And some of my favorite quotes in sports I like to bring to your attention here. And one of my very favorites was from Lee Trevino way back in the early 70s, the little 5'7" dude from Dallas, Texas, who I got to meet once, was playing, and he had won the tournament, and he had to sink a 18-inch putt to win the tournament. And Pat Summerall was interviewing him, and he said, Lee, he said, the pressure to make that 18-inch putt to win the tournament, he said, must have been absolutely unbelievable. And Trevino just started laughing, and he said, are you kidding me? He said, there was no pressure at all. He said, if I finish second, I win $211,000. He said, that's not pressure. He said, pressure is when you're playing at the Dallas Country Club in a $50, $100 Nassau, and you've got to sink that same putt, and you don't have any money in your pocket. He said, that's pressure, and that's really what pressure is all about. Anyway, that was really quite nice. I actually met him, many years ago. One of my neighbors in Westlake Village that lived just in the next street over was Dave Stockton, and he won the U.S. Open that year, and he and Lee Trevino were friends, and they still are, and I got to meet him at a party there. But anyway, let's move on here and look at some of these other things. If you remember, we were talking about the FTSE yesterday, about that really long channel that it was in up around that 27 or 72.50 level. And we said if it broke that, that would most, either to the upside or to the downside, that would most probably, give you the direction of where you were going to be headed. So right now we're backing off a little bit. Those of you that follow stock index futures and also follow HM Gartley, I would certainly recommend you reread pages 221 and 222 today, because it's a very interesting scenario that we have going on here in the market. I've had one other question. That's right, David. I really like Yogi Berra. I met him twice, and he was absolutely a fine fellow, just a really nice guy. Anyway, let's move on here to the. Someone's asked a question about the dollar index, and I wanted to bring that to your attention because I think that's where the key to all this stuff most probably lies, and we're going to take a quick look at it here. And it's reversed today because we went right down to that major support again. We'll get this up. I focused on this over the weekend. You notice that I have this ABCD structure in here. And yesterday we had that big move in the euro. And even last night it rallied up to the exact 786 at 124 and change, and then is backed off just about 100 pips. And I'll go into that in just a little bit. But the dollar index, to me, is the key to what's going on in all these markets, folks. We have a debt structure of roughly $20 trillion. The only way that is going to be taken care of is either through bankruptcy, which is totally unacceptable, or through inflation. And so I'm expecting inflation to raise its head very, very shortly, but it hasn't done it yet. but we're going to be watching that very, very closely. When I first started speaking in China way back in 1995, which was a fluke, the person at the Chicago Mercantile Exchange, oh, we got a caller on the line. Let's get Dan on the line. Dan from Miami Beach. What can I help you with, my friend?
Hi, Larry. How you doing?
I'm good, sir.
I got a question about the Dow future, the YM. I follow that closely.
Okay.
What I've noticed is it's the 20-minute line I hear you talk about all the time. Is from the last couple of months, it's been in a downtrend, the 20-minute line, but now it's over a couple of days or so. I'm wondering where you see like a buy point on a daily chart for that going forward here.
Well, we're up quite a bit this morning, so I can't buy on strength like this, but we're completing some pretty serious patterns in the Dow E-mini contract. I'll put this up in the room so you'll be able to see it. I think I've got this. Hold on one second here. It's the same pattern for all of these. The problem is that I've got to put the one up that there. I think this is the one. There we go. Here's the one. I'll bring it up. You can take a quick look at it. But we've got quite a few ABCD patterns up here at this 24,780 is a big number. Whether that's going to stop it or not, I'm not sure. But any pullback of 700 or 800 points in the Dow will most probably meet with really good support.
700-800 points. Okay.
Yeah, look at the ABCD structure as it gets down there, because that'll really tell you what your risk is because you just can't buy a 700-point drop in the Dow, because we've seen moves of more than 1,600 points since February on the downside. So it's not for the faint of heart. So look for that ABCD pattern to help you define where you want to be a buyer. That's the key. If you look at that chart we just posted, there were several different opportunities, where we had really nice Gartley patterns that you could have bought it. So those are the ones that I would really be suggestive of buying those, because those are the ones that are the least risk, because you know exactly where you are. Because if you break below those patterns, you really don't know where it's going to go, so you've got to step aside.
Yeah, I see. Well, that makes sense. Okay. So
hey, thanks for calling in. Yeah, please go ahead. Sure.
In terms of the gold contract, the downtrend line, it seems that it's the same downtrend line, the 20-minute line, and the gold contract hasn't been able to get through it. It seems to be backing off again today. Where would you be a buyer of the gold contract?
Okay, Dan, that's a good. Where I would like to buy it and where I might have to buy it might two different things, but where I'd really like to buy it is at 1285. That would be equivalent to silver getting down to about 1510. That would wash out everybody that's been bullish over these last few months, and that would complete some major patterns. But frankly, I don't think gold's going to get much below 1330. That's just my guess. A lot of it's going to depend on what the U.S. dollar and the euro does, because those are linked, at the hip. In fact, when we're done here, in fact, I'll do it right now as we're talking. We got a break coming up, but I'll show you the relationship just last night in the gold and the euro. You'll be able to see that once the euro topped, the gold just absolutely, dropped. It dropped over, $10 an ounce as the euro was saying. I hope that helps, Dan.
Yeah, it does. I got to run. Thanks a lot.
Thank you. Thanks for calling in. We'll be right back, folks. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were showing the relationship of gold and the euro, how they've been going lockstep over the last few weeks. And as you can see last night, when the euro got up to that 124 and change, which was the exact 78% retracement of the previous move down, actually it was off by 2 pips. And anyway, after that happened, of course, we've had a pretty big sell-off, you know, in the gold market, relatively speaking, of course, $10 an ounce. If we take a quick look here at the silver chart, you'll notice that it's been following along with the gold. Last night, we made the 78% level retracement in the silver, and then, of course, it sold off. At that particular time, gold was acting a little bit weaker, but now we backed off a little bit. But longer term, it still looks like it has a chance to be really strong, but we'll have to wait and see on a longer term basis. But frankly, folks, it all relates to what is going to happen to inflation. Hold on one second, please. And from that, we're going to find out, you know, what's really going on. Now, I wanted to bring something to your attention, you know, about the news. Let me just show you. This was something that we talked about in the newsletter this week, that we had a possibility of a big double bottom. I'll cover oil in just a minute, Danny. Give me 1 second here. If you'll notice here in the chart here of the coffee, that we had several things happening down here at that 115 level, and we rallied all the way up to 119. And my assumption over the weekend was if we get above that 119 level, this has to be a pretty bullish chart. And I said, you know, you don't want to buy coffee until it gets above that 119 level, because, you know, if it fails, it was going to drop dramatically. And as you can see, you know, we gapped down yesterday and got all the way down to the 114.25 level. We bounced a little bit off that, but that is a classic double bottom. Now, just to show you how wonderful some of these companies are to us, I just wanted to bring you the relationship of the coffee to something that people drink all the time, and that is Starbucks. Let's just bring this up here and take a look at it. And believe it or not, Starbucks just raised their prices in coffee. Now, you can see the coffee prices in blue versus the price of Starbucks, and you can see back in November of 2016, of course, that was the election when we had the big surprise, but look at the divergence that was happening there. We had coffee prices going up and Starbucks going down. That makes sense because it's going to cost them more to buy coffee that they sell. And look what happened, when Starbucks was really high. Coffee prices were really low, and the price of the stock was high. And what do we have now? We have them increasing the price of coffee when prices are low. This means that we're probably getting ready to see one of two things: either a turn down in the price of Starbucks or a turn up in the price of coffee. So one of the two is probably going to be going on. Regarding the crude oil, Danny, we've been talking about that for quite some time, and I want to bring it to our attention because we had a higher high last week. We're now $2 a barrel under that. We're still looking for the potential of a three-drive pattern up here at the 68.85 level. Now, that's a good $3 a barrel from where we are right now. The key here is we are very close. If we go below $65 a barrel, that is going to be highly suggestive that this last top missed its pattern. Instead of making the 1.27 expansion, it's going to miss it, and then we're going to find out, what the next support is going to be. But until that happens, until we get below $65 a barrel in the crude, I have to assume that this pattern that we're looking at 68.85 still looks like it has legs. If you'll remember, if you took a look at the newsletter, of course, we were watching for a potential double top here coming in this week in the heating oil contract, which is very, very, very close to what the crude oil does on trading, and we hit that almost exactly. We missed it by half a cent, so that's another possibility that the heating oil has made the double top, and yet the three-drive pattern in the crude oil has not been able to be completed yet, but we won't know that, for quite some time. There's a couple of news announcements that are really important, I think. I noticed this morning when I was checking on Bloomberg to make sure the end of the world hadn't happened, we noticed that China had just completed, over the last 6 months, the largest percentage of buying that they've ever had in Treasury bonds. If that's the case, folks, you better be careful being long Treasury bonds, because if the China bought as much as they've ever bought and bonds can't rally, that's not a good sign. So we've been very, very bearish bonds and notes because we're looking at higher interest rates. That's going to be tied into that inflation theme that we're looking at that is tied to the U.S. dollar. If the U.S. dollar gets below 88, folks, that is going to be a major game changer, and it looks like it could do it. That means the euro's got to turn and get very, very strong. It's not doing that right now, and that means that gold's going to have to turn, and it's not doing it right now. But if that does happen, that's going to be a big game changer. That'll be a biggest game changer as we had from November 8th of 2016, in my opinion, because that's going to be a situation where Morgan Maxfield is a guy who used to trade through Drexel Burnham. He was one of the money managers for Elvis Presley and Neil Diamond and a whole bunch of other people. Really nice young man. We were the same age, and he used to come into the Drexel office and mix Twentyman and I, and it was really a pleasant experience meeting him. Unfortunately, he had a new Gulfstream, and as he was leaving his home in Kansas City one rainy spring morning, his plane crashed, and he died. But he wrote a book called They Ring a Bell, and he said to watch interest rates on a longer-term basis. This was back in the mid-'70s when gold was taking off, and he said watch for this. He was looking looking for a big change in inflation, which nobody was looking for at that time. Unfortunately, he wasn't around when it happened, but that's exactly what's going on. Yes, I see that that California has warnings on cancer, but they've got warnings on sparkling water and milk duds. So those are you don't have to worry too much about there. Okay. No, I don't know anybody who founded Gulfstream. I'm not into planes and boats and stuff like that. I never have been, and I don't intend to be. So we'll keep an eye on this. I want to bring also to your attention the Chinese yuan. It's trading down around 6.2. When I first started going to China in 1995, it was trading at 12.5. That means that it was twice as you got twice so much value in with your dollars in China that you do now. So that's it. You want to see the John Madden and train. I don't know if you know this, Mr. Z, but John Madden was the coach at Cal Poly San Luis Obispo, which is I lived in San Luis Obispo, and my daughter Jill and my grandson still live there, and that is about 8 miles from Pismo Beach, where my office was. And I used to take that down the road every day to Slow Town. Yep, and Madden was there, and he had a bar down in Pismo Beach that's still there, Dirty Harry's, and it's still there to this day. It had nothing to do with the, Harry Callahan. It was just called Dirty Harry's, a biker bar. Favorite hangout of Bryce Gilmore, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been asked to take a look at the chart of Goldman Sachs. This is a daily chart going back over the last 4 months. As you'll see, we've just made a 61% retracement from the high that we made back on March 13th. We hit that this morning pre-market at 263 per share. We're now trading around 261 per share. That was the exact 61% retracement. And if you look at this pretty closely, you can also see the ABCD structure from April 2nd to where we are here on April the 17th. So this is a Gartley pattern. If it's good, you're not going to see Goldman Sachs much above 264. The high was so far 263. It had much better than expected earnings. You'll notice that the income was way up, and then they've also increased the dividend. All very, very bullish things that should help that stock quite a bit. And if the stock doesn't go up with really good earnings, then you know that there's most probably a pattern, or it's going to be something wrong, because markets that don't react well to news certainly have only one way to go, and that is to the downside. So watch that, very, very carefully here. I'm trying to find my chart on the banking index. Here, I believe this is it. And there, nope, that's the Hang Seng. Well, I just should show you the Hang Seng, because we have a lot of friends over in Hong Kong that trade this. And of course, yesterday we hit the big, I'm going to do the grains just next, Marshall. So give me 1 second here and we'll take care of that. But you'll notice that the Hang Seng made the 61% retracement on Monday. It had the sell-off last night, so that is in a downtrend. Basically, it looks very similar to the same pattern that we're seeing here in the U.S. stock markets. Okay, let's take a look at these grain markets. We'll start out with the meal, and the reason why we'll look at the meal here is because it is 80% of the value of the soybeans itself. And that's one of the reasons why, it's really fun to trade. You have bigger swings in meal than you do in oil. So those are some of the things that we're watching. But it's got a really nice pattern here from the bullish side. Let's just pull this up. This is spot meal. This is July meal. You notice July meal made its high back on April the 9th when it made a 78% retracement. That was right into a bullish grain report, as you recall. We've now backed off almost $2,000 a contract down at this 375 level. We're trading around 378 right now per ton. And if we get down about another $800 down to about that 370 level, that's going to be a really interesting spot, because that's going to be right at the 78% retracement, very similar to what we had on April the 4th. And folks, that is a 135 pattern. If we get this over the next few days, actually the ideal time to get it would be on Monday of next week. And if we get there around this 371 level, that's going to be a very interesting low-risk buy in soybean meal, because this is a really bullish chart longer term. And if you stop and think, that hasn't really backed off very much, and it does have some really good pretty good spots to look at. The one thing you want to keep in mind is also the soybean oil, because oil is lagging, and the reason why is the soybeans are being crushed for meal. And that's really highly unusual, because with the big drop that we've had in hogs and cattle, you wouldn't think that demand was there, but there's demand coming in on a on an international basis, because soybeans have an inelastic demand, folks. It doesn't make any difference what the price of soybeans is; they have to use it. It's so important it's probably the most important food crop, because of its protein value. It's used, the soybean oil is used in margarine. That's basically when you're using synthetic butter, you're using a vegetable oil. Usually it's soybean oil or canola oil or corn oil. So, and then if you stop and think, if you're going to paint something, you're using soybean oil usually as your paint. So, it's very, very important. And of course, it's crushed for its meal, and meal is basically tofu, those of you that like tofu. So it's a very, very important crop, and it is inelastic. We talked about the wheat yesterday. It got right down near that buy point we wanted at 522. how much is that? 522 per bushel. Let's try that, Larry. 522 a bushel. I go between pounds and bushels and ounces and have to get it straight. Anyway, the 61% retracement on that wheat, on that Christmas wheat, comes in at the 517 level. So that's the level that we're watching in the wheat, is 517. Keep a very close eye on that because it's got some really interesting spots here. Now, we've had a request to take a look at another stock that is always in the news, and again, it's in the news today, and that is the movie production company called Netflix. And as you'll notice here, the bottom that we made on April 4th was an exact 61% retracement from the bottom that we made back on February the 9th. Then we had the, this is a 4-hour chart, so between the high that we made on Friday and the low we made yesterday, that was a perfect 382 retracement down there at $300 a share. We're now trading at around $329. The ABC structure on this takes this up to $350. So that's what it looks like. Now, that doesn't mean that's going to happen, but that's what the structure looks like at this particular point. So, you know, pay close attention to that. I have to go back to beans for just a little bit here because I wanted to show you, I got this chart from our good friend Cy Monley at Sylvius Financial, and I wanted to show you the relationship here. This is going the option relationship here, which this is actually very bullish, folks, because it's making a bottom. But you'll notice here that the cost of buying options for 90 days out is about as low as it's ever gotten. You can see here where we are right now. We've had a little bit of a turn here, but this is actually a very, very bullish chart for the bean complex. So we want to watch this very closely. We're going to try to have Cy Monley on next week along with good friend Rich Anderson. We'll try to get both of those gentlemen on. And I believe it's time to check on with Stan Harley. We'll try to get Stan on next week because he always has some really interesting things to look at as we're getting ready. We got the market opening here. How much are we exploding to the upside here? We'll see what's going to happen with these markets, but we've got some major stuff happening, and we want to pay close attention to it. Someone's asked me another question about the gold market. Folks, I tell you what, this gold market on a long-term basis is so doggone bullish that I almost came in today and bought the gold at the $342 an ounce level. I decided, well, I better wait just because of what the euro was doing, and that's one thing you usually don't want to do is think too much. But take a look at this gold chart just from a long-term perspective. Just walk away from your machine and look at it. I mean, since January, this thing hasn't came down at all. We had a beautiful ABCD pattern down there at 1303. We tested it again back in March. Then we went up and made new highs. Then we've had 4 $34 corrections since February. This is not acting bearish, folks. This chart shows the way it was on Friday at 1348. We're now 1344. This is a bullish chart. That's all I can say. Whether that's right or not remains to be seen. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I posted a chart of the banking index, of which Goldman Sachs is the leading part of this. And as you remember from just a few minutes ago, Goldman Sachs just made a 61% retracement up at that 263 level per share. I don't know where it's trading right now. The last time I checked, it was around 260, 260 and a half, I believe. And you'll notice this is the first ABCD correction. If you'll remember from Gartley's book, whenever you have a ABCD correction in a new bear market or a new bull market, he said you should take that trade because that is the highest probability that you can get with the biggest payoff and the lowest amount of risk. And, you know, when you see these, and, you know, they don't happen often, but when you do see them, you know, they do help you realize that sometimes they absolutely work beautifully. If you remember, just 2 weeks ago, we were looking at one in the Dow Jones Utilities, and this looks almost exactly like well, not exactly because it's much weaker than the banking index, but you can see the ABCD pattern very similar to what we're seeing now in the banking index. So the fact that this banking index isn't really going nuts today is really quite a surprise, but it's still early, and as we know, markets do change. I had one other thing to chat about with China, and that is I talked to you about the fact that they bought the most number of Treasury notes and bonds they've ever bought over a 6-month period. The second thing is they've changed their views on automobile companies. So now, if you go to China pretty soon, within the next 3 to 4 years, you're going to be able to see U.S. dealerships in China. The dealerships you see in China, of course, are the Chinese cars and a few Japanese dealerships. And you'll see a Ferrari, and you'll see a Porsche, and you'll see a BMW, and you'll see a Mercedes in the larger cities, of course. But you won't see any U.S. cars on the freeway, with the exception of Buicks. You'll see some Buicks. They're used as town cars in China, and for some reason they love Buicks. Anyway, that's what happened. So that's going to change a little bit. If they were to happen to buy an American car and take it to China, getting it serviced is probably the biggest problem. But with the dealerships changing now from what they've said today in this announcement that they're going to allow the bringing in foreign cars into China for purchase. So we'll see if that's going to be the case or not. Tesla is not available in China, as I understand, so we'll see. Yeah, but they don't sell U.S. cars. That's the problem. They sell a lot of cars, but they don't sell U.S. cars. I mean, that's that's it. So we'll see. I don't know what's happened. If that's changed, it's changed in the last 5 or 6 years, because the last time, well, I go to China quite a bit, but you never see a U.S. car in Hong Kong. I mean, you just don't. Well, Tesla's a U.S. car. Sorry, you did see that. A lot of Teslas. The reason why is when Tesla came out, Elon Musk made a deal, because this says General Motors sells more cars in China than the USA. Wow. Well, that must have changed quite a bit. So I guess so. I don't know. Well, Cadillacs are nice, but see, that's changed. But in Hong Kong, Tesla, that's there are no Teslas in Arizona. They don't have a dealership here in Tesla. I mean, there's a lot of people that buy Teslas in California and in Nevada, but we don't have dealerships here in Arizona. As I know, I'm not a Tesla person, but in Hong Kong, Musk made the deal that if they bought Teslas, they didn't have to pay the 100% tariff. Because if you buy a car in Hong Kong, whether it's a Mercedes or BMW, you're going to pick up a 100% tariff, but not in Hong Kong. So we'll see if that's going to be the case. So if you buy a $100,000 Mercedes in Hong Kong, it's going to cost you $200,000 because there's a tax involved with that, one-time tax. Okay, let's move on to a couple other things that we need to chat about here. Check and see how the markets are doing. Probably going crazy as always, and we'll see what's going to happen here. The bonds are still in a very strong sell mode. We've had about a 3/4 point rally off of that little Gartley yesterday. Gold is still holding this 1344 level. I'm really thinking about buying gold today, folks. After looking at these charts longer term, it really makes me wonder whether you cannot be long the gold, because that's a real interesting one, to pay close attention to as far as I can see. Anyway, let's move on to one other question that someone's had. Yes, the NASDAQ, I'll try to bring this up, Dudette, on the NASDAQ. I have the chart done. The $64 question is whether I had it done correctly or not, because I did it in the middle of the night as it was going nuts, and I can't find it. So we will find it here somewhere. Maybe not. I'm not going to worry about it. This might be it here. Nope. That's the E-mini S&P. Well, I'll bring it up because it looks similar to all the others. We'll just take a look here, what's going on here, and there we go. Yeah, that was a good movie. That was called, what was the name of that movie? What was that movie with? Oh, shucks, Billy Crystal. What was the name of that movie, Z, with Billy Crystal, the Western movie? City Slickers, yes. I saw that here in when it first came out in 1992 here. It was in Tucson. I was here visiting my cousin and visiting Walt Bressert, and it was really, yes, I'll bring the transfers up, Tucker. I did bring it up. I brought the, I brought the, shucks, I brought the utilities and not the transfers. Thanks for reminding me, Tucker. I appreciate that. There's the chart on the transportations. You'll notice that we just had a 5-day rally. It was a relatively weak rally, but yesterday it was a little bit stronger. So we'll see if see what's going to move on. Okay, I don't understand that question. You mean about Walt Disney, Z? Is that what you're talking about? I knew, Roy Disney, his brother, was one of our biggest customers at Drexel when I was there, because his daughter was Lori, and she was a beautiful girl, but oh, did she have health problems? She had really bad diabetes. She also conducted cancer. And she had just so many mental problems. She died relatively young, but what a nice girl she was. But Roy Disney was one of the larger customers for Drexel Burnham. Walt had already passed away, of course, but we had access to the Walt Disney private apartment right above Pirates of the Caribbean, and that was one of the best perks you could have at Drexel. Is if you had a birthday for one of your children, you could go there, and Mickey Mouse and the usual gang, Mickey and Minnie and the whole gang would be there, and Cinderella, and bring out the cake and everything. And this was his private apartment where he wanted to live the last days of his life. He actually wanted to live on the grounds of Disneyland, which was started in July of 1955, and I was there. I hitchhiked from Terre Haute, Indiana with two of my buddies, and with $50 in my pocket, and we were gone 6 weeks, and I still came back with $6. That was pretty good. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got about 2.5 to 3 minutes here, and I'm getting up on my soapbox. I want to talk a little bit about the U.S. dollar index. I think this is the most important chart in all of the financial charts that we're looking at right here. As you'll notice here, we made a 61% retracement in this dollar index down at 88. We had the false breakout to the downside, then the really strong rally, and the rally has stopped. We have not got above 91 in the last several weeks. That is not a good sign. That means that the price of the euro could start to skyrocket. If the price of the euro goes up, You know what else goes up? It's yellow and it's shiny, and it started in South Africa. So it's gold. Watch it very, very closely. This also is reflective of interest rates, because if the dollar goes down, that means that people are going to be buying dollars to to see what they can lock in on their interest rates. But keep in mind, inflation is where the real action is here. That's the only way we can get out of this debt that we have over the past 20 years. We're up to $20 trillion, and we could do that easily by everybody that bought the bonds. They're going to get hammered, and we'll see what goes on with that. But anyway, watch that dollar index, because below 88, folks, that's going to ring a bell. That's a big bell that will be heard all over the world. And I think you're going to see some really dramatic things, happening at that time. Also, if you have a few extra bucks, buy the silver rounds, the 1 ounce silver rounds that are issued by the government. Most coin dealers sell them. They're $16. They're probably $18 now, maybe $20. They're beautiful, and a lot of them have, the eagles and other stuff on them. But it's really something you should put back, because I believe we're getting very close to something like happened in the early 70s when we have inflation coming up. Something's not right out here. It's related to this dollar index, is my guess, so keep an eye on it. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.